Hello, ladies and gentlemen. Welcome back for another episode of Business Insights here at Roland Berger. I'm Dorival Bettencourt. I'm a principal in the sustainability practice, focusing on localization, local content, and socioeconomics around the world. I have with me my very esteemed colleague, Zachary Kaplan, who is a partner and also let's say, the head of localization and socioeconomics for Roland Berger. Real pleasure to have you back, Zach. Always great to have your insights here.
Yeah, fantastic to be back and to continue the conversation, looking at this topic from a different lens and a different angle.
Excellent. So last time I had you over, we had a very interesting discussion around the global trends in localization and local content. We used the opportunity also to set some of the parameters, some of the concepts, and that conversation generated a lot of buzz online, which was very, very interesting and pleasing to see. And I think maybe because this topic is so wide-reaching in its impacts and its implications, right? It crosses borders, it crosses sectors, and therefore we're seeing a lot of engagement around this topic. What I'd like to propose is, as we go through these episodes, we keep diving deeper and deeper into different topics. And today, I'd like us to zoom in on the United States. Right? As you know, the U.S., over the course of its manufacturing history, has gone through many transformations, many changes. And just to summarize, to get us started, if you go from a period where you have this formation of large manufacturing hubs across the country, whether you're talking about the Rust Belt, the automotive hub in the Detroit, Michigan region, or you're talking about textiles in North Carolina or steel in Pittsburgh or Indiana, then around the 70s, 80s, you started to see this push towards the, let's say, offshoring of industry, right? Where a lot of manufacturing firms were seeking lower input costs, access to raw materials, et cetera, et cetera. Then in the early 2000s, you started seeing a lot of industries actually starting to come back. And more recently, I'm seeing this dynamic of new industries emerging in the US, industries coming back, and this focus on localization of supply chains really gaining a different scale and pace in the country. So I'd like to get your thoughts on how this dynamic, how this movement is unfolding in the US, please.
Yeah, I think it's a very interesting thing to look at this topic of localization and how it applies to the United States. The economy there is incredibly vibrant and dynamic despite the ups and downs we felt in the last 20 years. It continues to be a bit of a bellwether for where things are heading. So I think we do need to look at this topic of localization in the context of the U.S. economy. But first, let's clarify a little bit that you won't hear the terms local content or localization being used in the context of American economic development or policy right now, the way that we may see in the region of the GCC or other emerging markets. Reasons for that, but I think one is more going to hear terms around reshoring, workforce development, community benefits, industrial benefits, socioeconomic impacts associated with the new policies, the new investments that either or the government is making alongside the private sector or the private sector is making in manufacturing, in the growth sectors of the economy. What we're seeing, though, is certainly that the United States is experiencing a trend of localization, let's call it localization. Okay. There, which is certainly has similar tenets to what we see. There are similar drivers globally that are pushing that, but there are also nuances for the U.S. economy and the political economy that's taking place there that I think are worth unpacking a little bit more so that we get that deeper look at what's going on in the United States specifically on this topic.
Okay, great. So thank you for clarifying a little bit let's say, the concepts and definitions and nomenclature, so to speak. You touched on drivers, and I'd be very interested in hearing a little bit of what's driving the kind of acceleration of localization in the United States, and maybe also juxtaposing that a bit with the drivers in other parts of the world.
Well, I think we can break those down into a couple of components. Not in a particular rank and order, equally important, but they're all drivers of what's shaping this. And to say that this has been a trend that I think has been building and emerging over the last 10, 15 years, so it's not sudden. And I think it's accelerated tremendously. I mark it in my mind with COVID. I think COVID just catalyzed further and accelerated things that were already taking place. But let's look at some of those. The first would be technology and innovation. So it's a good thing that we are innovating. There are new technologies. There's the role of digital and AI and all the things that we talk about in other contexts. And as that is applying and being applied to core supply chains, manufacturing industries in the United States, it's opening new cost opportunities to work with local suppliers, local companies, new technologies that didn't exist 20 years ago, that could actually make more efficient, more costly the manufacturing, the production of a good or the provision of a service in the United States in a way that you didn't have that 20 years ago. And much of those skills and the infrastructure that's needed to support it didn't exist 20 years ago. We didn't even know. Now it's either present or developing or has the ambition of developing. The second thing has to do with the political economy. I think as The Economist said in an interesting article and called it, industrial policy is in vogue right now globally. We'll say that for the United States.
Used to be a dirty word.
It used to be, but I won't term it that. But I think that we're certainly seeing behavior of the American policy decision makers around industrial policy, and that's a political economy driver that I think exists both sides. Both major parties are doing it in their own way. It certainly is, which we can explore a little bit later, on incentivizing behavior that is impacting companies around how they need to react to those policies, those regulations, and what's changing. I think there's also, let's not underestimate the role of the consumer here and the ultimate beneficiary, the person who's living, the citizen in the community, which is now more than ever, is a trend that's continuing, is the expectation of good corporate behavior. And good corporate behavior, if you want to call it, their impacts on their social investments, meaning tied to their core delivery of a product or a service. What is their impact? What jobs are they creating? What is their sustainability plan? And I think that's pushing companies to revisit the local impact that they're having, the lives they're touching, the people they're hiring, where they're sourcing their materials, and the traceability of those materials, which allows them and is motivating a look of what should we be doing locally to tell our story, and can we have a greater value impact on society while having a commercially successful business.
Okay, excellent. So technological developments, geopolitics, and also changing consumer preferences, consumer behaviors. Excellent. So it seems like there are a lot of strong drivers behind this movement. Now, what I'd like to go to is, what opportunities is it creating for CEOs, companies, and investors?
Yeah, so I appreciate that you led with the opportunities, because there are certainly challenges as well. I do see this as a place of opportunity for businesses' behavior in the market. I think the first area of opportunity is to engage local suppliers, new local suppliers, small and medium-sized enterprises, to provide inputs, to provide services, technologies, innovations that can go into the core development and production of a good or a service of these major companies. Again, that's capitalizing on the innovation side of things. This can have a very positive effect on the quality of the good or the service. The cost. We're seeing examples where this is reducing the cost of production, and hence reducing the cost that's passed on to consumer for something that's cleaner, for something that's better in what it's supposed to do, and locally manufactured or produced, or at least having greater value addition within the geographic confines of the United States. I think another opportunity here is, in parallel, as there is this recognition of the need to reduce emissions globally, climate change, environmental impacts, this is also an opportunity for companies to address some of those sustainability challenges, such as emissions, doing the right analysis and seeing if that company can source something locally, sometimes it will have a net positive reduction in emissions. It will have a lower level of solid waste or waste product coming from that. These are great opportunities for companies to be able to address those issues while also improving their product as well.
Okay.
And then I think there is a reputation and a brand story here for many, where it always feels better and consumers expect it, to be able to connect the consumer with the product and the story that goes along with the development of that product. Whether it's a pound of coffee that's being imported from far away, and you want to know the story and that it was fair trade and fair wages were paid for that so that you can consume it, or if it's the steel that's coming, and it's greener, it's cleaner, it tells a larger policy story and impact story that this generation we care about.
Excellent, excellent. So it sounds like there's some really interesting opportunities coming up, and one thing that I find quite interesting within this whole dynamic is the opportunity for businesses also to become more agile in how they adapt to consumer preferences from that proximity. Right, you're reducing the lead times to get to the consumer, so it gives you the opportunity to just be a little bit more, let's say, nimble in terms of how you react, how you design your products, how you reconfigure your production processes, etc. So I think that's all creating very interesting opportunities. However, with something like this, there's always also a flip side, which I want to get into now, which are the challenges. Right, I'm sure that something like this, where you're bringing back significant operations, or you're developing new operations from scratch, operations that didn't exist before, because we like to talk about reshoring. It kind of gives this erroneous idea that the same thing is coming back, but these production processes have evolved a lot, have become much more technologically advanced, have changed in terms of their factors, so become, for example, less labor intensive. The skill of that labor has changed. So tell me a little bit about the challenges that companies are grappling with in the context of this localization movement.
Well, I think front and center in all of the thinking we have around this topic is the idea of competitiveness. Okay. Companies need to remain competitive. And in order to remain competitive, you need to have the right mixture of cost, production. The production costs need to be competitive globally. You need to be able to export your product in a competitive, cost competitive, price competitive way. And so it's a matter of optimizing. I always come back to this idea of not maximizing what's local or minimizing what's local. It's looking at all of the set opportunities and challenges you have in front of you at a given point in time and optimizing what makes sense while remaining competitive. Okay. And to do so, some of the challenges that we're seeing in the United States right now in the market is, firstly, it's a very tight labor market. Employment data continues to exceed what a lot of expectations are, and that certainly has its positive impacts. But from a cost side of part of the equation, can be cost additive to the end product or the service. Yeah. That's an issue when you're trying to be competitive, not only in the U.S. market, but many and most of these manufacturers and companies, industries, are looking to create goods that export as well. Yes. On the globe. So there's that. There's labor shortages. Well, there is a mix right now between the skills that are needed, to your point, of a lot of the new skills for these new technologies that are being integrated into production processes and manufacturing. It's not the skills of 20 years ago. It's not even the skills of 10 years ago at the rate that we're developing. And like any economy, the United States included, there's a lag time. You need to train up. You need to skill up. You need to get your institutions knowing the right skills, to train the right skills, to then give them the amount of time to put that labor into the market and then make that connection in there. So there is a mismatch there around skills. There's an infrastructure gap here. The infrastructure that is needed both on keeping up with the logistics and the transport to keep costs down and competitive. The United States is lagging in many ways there. We hear about this, and unfortunately we hear about many of the infrastructure failures that happen. Yeah. There is a cost to that. The visible things and the pride things that we don't like to see, that our infrastructure is rusty or cracking, but for businesses, that's a very real impact on their business. There's also a capacity issue of infrastructure, of new things around data centers. So the more data centers and the cost around energy associated with data centers and the cost of energy in general, these all flow to a business that's making decisions on what it can, quote, localize versus what is still cheaper to do somewhere else or more competitive. Things that I think there are pieces that are being done well in the market in the U.S. to address these gaps. There's still gaps. Absolutely. And so when a business and a CEO is making decisions around these are some of the things that are gaps, in addition to trying to respond and figure out how to be nimble and agile around the political economy, changing policy, regulations, tariffs, subsidies, all have cost impacts on businesses.
Absolutely. Okay, excellent. So, I mean, it seems like this is, first of all, was a very positive picture with a lot of opportunities, but there are also some significant challenges ahead. And it seems that, at least on a positive side, that the private sector isn't left to deal with these challenges alone. I've seen a very, let's say, robust response from government in the US in terms of providing the right incentives, the right mechanisms, the right policy environment to support this localization. Laws, policies, mechanisms such as the Inflation Reduction Act, IRA, the bipartisan structure law, Justice 40, all these incentive packages. Can you just help us understand a little bit more about, what that looks like in terms of the main pieces of incentives that you have in the US right now?
Sure. I think there's an important link to be made here
Okay.
because we don't read the Inflation Reduction Act as a localization project. It's about infrastructure development, green infrastructure, energy
Yes.
efficiency, energy transition, and all of its associations and adjacencies in the market. However, the storyline goes is that we know that in order to transition and undergo an energy transition at whatever pace you want it to be,
Yes.
10, 20, 30, 40 years, whatever your timeline is, in order to incentivize, build, and create new technologies that can scale up, whether it's chip manufacturing, semiconductors, things that we need for the industries of the future, such as AI and so forth, that there's going to have to be some government intervention to bridge the financial gaps to get there. And the government is saying that we recognize that and we will help. And in the process of helping to access whatever incentives that we're going to provide, there are policy objectives such as the creation of American jobs, such as the inclusion of American suppliers into that process. And that's where we see this localization story. We see strong workforce commitments and local workforce investment requirements, expectations, I should say, more than requirements, around accessing the various mechanisms that the government's done. In the last there has been over $370 billion of investment, money made available around devising, supporting the development of local supply chains through the Inflation Reduction Act, the bipartisan infrastructure law, the CHIPS Act. All of these have very serious implications on localization expectations. And through those, we are seeing that there are various mechanisms that are involved that they're not all the same, but the government is stepping in to provide a lot of support in order to get there, and in the process achieve its objectives around localization and socioeconomic impact.
Okay, excellent. And I know that you in the US, you've seen a spike in interest from clients in terms of getting your support and your team's support in terms of accessing this type of funding, right? It's not it's probably going to be a pretty complex process. So I wanted, of course, we don't have time here for you to go nitty gritty, but if you could just walk me through a little bit of the high level steps or considerations needed for a company to be accessing this type of support.
Well, I think it also it's a good question, and I myself am still there's no easy guidebook to put in the middle of the table here and how to, and it also depends because the mechanisms that are out there vary. There are tax schemes and tax incentives. There are grants like we see in the industrial demonstrations program that's going on through the Department of Energy. There are concessional lending programs through the LPO, the Loan Program Office through the DOE. So there are each one has its nuances around what you need to do to access and its processes. In general, I think the things that we're seeing, that our partners are seeing to be successful to access this, have to do with a very clear business case of how this is going to benefit the industries of the future and achieve things such as energy transition, the secure building out of chains, critical supply chains that secure national interest. So that theme of national security and national interest is a very, very important one that permeates throughout this. And there's certainly the aspect of the environmental impact, the investment that is going to be made. So it's not only securing that investment, but it's demonstrating the environmental impact that these will have. And I think the final really important piece, going back to the core of what we're talking about today, is what is the socioeconomic impact here? How is that investment going to create American jobs? How is it going to create American jobs that will last to the future, just not temporary project? What is the community impacts that this is going to have? What are the social impacts that this investment, this new manufacturing site, example, will have on that community, because it's being used, that money is being used to either gentrify, revitalize, create from scratch, create from new, what the government would like to see, policy-wise, the industries of the future and hence the workforce of the future.
Okay, excellent. I noticed that a lot of the mechanisms and a lot of the programs under the Inflation Reduction Act seem to be implemented through the Department of Energy, and there's a lot of a focus on energy transition and green supply chains. However, so is this mainly something that's being driven in the energy sector, or do you see this also playing out or spilling over into other sectors of the economy?
Yeah, very very good question, and don't be misled, which is just because the Department of Energy may be a key champion here in managing a lot of these current programs. Let's see what happens in the future. It's always changing. It's very much not just about energy. It's very much about automotive, for example, mobility, transport, and creating and shifting into the electric vehicle supply chain, the critical mineral supply chain. Lots of impacts on localization there, from the securing of the supply chains, the creation of those supply chains domestically, again, for national security interests, for resilience and independence, economic independence reasons. We're seeing it in automotive, and which has an extensive supply chain from the manufacturing parts, the assembling of products into those new areas, because they all are linked to energy. What is the energy that is necessary, and the infrastructure that's necessary to decarbonize some of those key sectors, but also because they're so innovative. There's a lot of transformation that's taking place. Similarly, in the industrial sector, the manufacturing sector, which are very heavy in terms of having a physical footprint. They're very extensive with their supply chains. So we really do see in those sectors and those industries a lot of relevancy, a lot of ties into the support mechanisms that are taking place right now in the U.S. market.
Okay, excellent. And it seems that when you look around the world, right, that this is while the U.S., of course, being the economy and being so visible, a lot of attention around this topic, we can't forget that this is happening in most major economies, right? Whether it's the European Green Deal that the EU has launched, whether it is the carbon neutrality pledge in China, or the green growth strategy in Japan, or the UK net zero strategy. These are all similar programs in the sense that they are putting very robust frameworks, mechanisms, incentives, but also protections. Let's not also hide away from touching on that. Protections for similar objectives of localizing supply chains, of developing green manufacturing, et cetera, et cetera. Now, what does that spell for globalization and for global supply chains and all the benefits that we've derived over decades from this movement of large global supply chains with a lot of cross-border collaboration and innovation? What does this mean now that every country is trying to do their own thing?
Yeah, I think it's a good observation, and mentioned earlier that this idea of industrial policy is in vogue. We are seeing the impact of these policies, these changes of mindset globally, which is a shift from the hyperglobalization that I think we experienced in the late 1990s, the first decade of the 2000s. So we see that capital flows are stagnant, if not falling, internationally. We see that exports as a percentage of GDP have fallen in the last few years. So I do think that these are having serious impacts on the trade flows, how the movement of capital and goods and labor is happening internationally in a way that is changing how we're thinking about and what we're seeing in the data around how markets are interacting. It's a mixture. Different countries are doing different things. Overall, tariffs are down globally. Countries like Canada, Australia, or Japan relaxing those. But then you have major players like the United States and India, which are increasing tremendously tariffs. The other thing that we see is overall sanctions. So trade sanctions, which certainly are an extreme, and that's having an effect on protectionism
Yes.
and the implication building out your domestic sectors, your domestic industries and programs. And then the associated governments and regimes are doing around the mixture between tariffs and subsidies and the use of subsidies to try and stimulate this local production, this local innovation, and this reshoring. All of those are tools on the table that are being used.
Yeah.
But the overall effect, I think we are seeing, based on the data.
Okay. Okay. And is this then let's say, just one move of the pendulum, right? Where we've gone from being, let's say, more isolated economies to then going into this period of globalization up to a point of hyperglobalization, if you want to call it that. And now we're deglobalizing. Is that going to swing completely the other way and then come back? Or is it more just an adjustment, right? That we've gone maybe a bit too far on the globalization track, and now we're just making a small adjustment. What would be I know you don't have a crystal ball, but from your expertise, what would be your guess?
Yeah, I mean, that is probably the most important question to be answered right now, and I've tried to make the crystal ball, and it doesn't really hold. So I'll stick to talking about it. I don't foresee that the pendulum is going to go completely to closing shop and everybody being completely isolationist. That this rebalancing is what I would call it, is going to continue, and then maybe it will go a little bit beyond the center, and then the swing back will be a little bit more moderate than what we've seen in the last couple of years from hyperglobalization to where we are now, and it will find its steady. What is the timeline on that? I don't know. I think so much of that depends on politics and global events. We didn't expect a pandemic to come and change this, and I think that had an effect on the pace of this rebalancing for sure, in a way. And I also think that as some of the impacts of these policies around the world play out, we're going to see data on what the effect is economically and socially and environmentally. And from that, with a little bit more time and data, then we'll hopefully see adjustments to those to come to what is the ultimate goal, is the optimal set of policies that don't sacrifice global trade, because that's net a good thing.
Yeah,
it's
absolutely.
brought billions of people out of poverty around the world and creates efficiencies and effectiveness and innovation and trade of ideas and people and capital
and resilience.
And resilience, absolutely, in a way that we need. We should never give, while at the same time not forgetting home base, so to speak.
Okay, excellent. So that's the global long-term outlook. What about coming back to the US and now in a little bit more of a shorter-term horizon, a few months down the line, talking about November, elections coming up in your country? What is your prediction? Will there be a radical change of these policies, of this movement, depending on what the outcomes are, or do you see this remaining steady? I'm not asking you to predict the outcome of the elections, by the way.
I will not predict the outcome of the election, nor will I be throwing my hat in the ring for that at all. Great question. Zooming out from the politics of what's taking place, I do think that what we have been seeing is that this trend has, in what I would call a party-agnostic way, for the last of administrations. We have seen a focus on looking more locally. What is the impact? How do we build out our markets and our supply chains and our manufacturing bases in the United States? Before the current president, before his predecessor, and whoever the successor and whoever's going to win. Now, it will probably be a variation on a similar theme. So one administration may approach it a certain way. The existing, if the incumbency wins, will likely continue what it's been doing for the last 4 years. I don't see a full reversal the overall trend of looking locally, but I do expect that there will be some adjustments, some tweaks to the policies and the regulations, whether it be the mixture between subsidies and tariffs, for example, the focus perhaps on the spaces in the individual industries, for example, where there would be some adjustments.
So from a strategic level, probably no change, but then in terms of the tactical and operational, in terms of how that actually plays out, the approaches, the mechanisms used to actually deliver that strategy are likely to be different.
I think so. I think that probably captures it appropriately.
Okay, great. So just to wrap up, we've covered a lot of ground. We've spoken about the drivers of localization in the US. We've spoken about the opportunities, the challenges, some of these mechanisms that the government is putting in place to support this drive for localization. Can we just close with your top, I don't know, 3 tips? If I were a CEO grappling with this topic of localization in the US, what would be 3 main things that I should be focusing on or thinking about in the coming years?
I think that I would start with building this into your 5-year strategic plan.
Okay.
That this is a theme that is here, that needs to be tackled head on, and should be used as an opportunity and a differentiator, a competitive differentiator, as opposed to one that to fight, resist, ignore, or hope that it goes away, or just do sort of bare minimum in order to
or purely a risk to mitigate or something.
That's
okay.
Right. See it as a value driver. The second one would be, don't underestimate the support that is out there in different mechanisms, and appropriately resource and look on trying to capture that. I think there are really tremendous opportunities around that. And then the third one I would say is to get the right approach on what this means, because localizing your business or the parts of your business, what is optimal for your business and your sector, is different. It's different in automotive than it is in energy specifically, than it is in industrials, than textiles, than healthcare. And so take the time to figure out what is optimal and then focus on those pieces as opposed to localizing everything or one particular part. And then go a little bit deeper there and say, what are those socioeconomic impacts and what is the story that I want to tell while improving my product or my service and positioning my company in a much more competitive, cost-effective, and differentiated way in the market.
Excellent. Well, thank you very much, Zach, for closing with these very, very insightful and useful tips. As always, it's a great pleasure to be speaking to you about this very exciting and dynamic and certainly very relevant topic right now. So thanks a lot for your time.
My pleasure. Always enjoy it.
Excellent. So that brings us to the end of another episode here of Business Insights at Roland Berger. Thank you very much for tuning in again, ladies and gentlemen, and look out for the next episode where we'll continue to dive deeper into this topic of localization and what it means for you and for businesses and sectors around the world. Thank you very much.